The Wash Sale Rule, Section 1091 of the Internal Revenue Code. Curl up to read it, and you'll either find yourself falling fast asleep or think you're in a nightmare. Hi there, I'm Jason from TradeLog. In the previous video of this series, I explained what a wash sale is and why the IRS is so concerned about them. It's been said that the IRS Wash Sale Rule is some of the most complex of tax regulations, so I want to help you understand the rule in everyday language and show you how it impacts your bottom line as a trader. And before we jump in, make sure to hit that subscribe button and give this video a thumbs up if you're ready to demystify the IRS Wash Sale Rule. Let's get started. The IRS Wash Sale Rule has been part of the U.S. tax code for over 100 years. It's evolved over the decades and can be quite complicated. The law is designed to prevent traders and investors from using wash sales to harvest losses and evade capital gains taxes. Now, IRS Publication 550 explains how to apply the wash sale rule, but even that explanation can be confusing. In fact, some aspects of the rules are vague and have never been clarified by the IRS. So let's break down the basics that you need to know. First, the IRS says if you sell a security at a loss and then replace it within a window of 30 days before or 30 days after the loss, it's a wash sale. So if you sold shares of Tesla at a $1,000 loss on November 21st, then any purchase of Tesla shares between October 22nd and December 21st could be considered a replacement, which would make the loss a wash sale. The IRS rule covers more than just stock trades. It applies to stock or securities, which includes options. And replacement isn't just buying, but includes acquiring in a fully taxable trade. And so, acquiring an option contract to buy a stock you sold may be considered replacement. In our example, if you open a Tesla call option on the same stock within the loss window, that option may also trigger a wash sale. The wash sale rule applies to all accounts you control, no matter how many brokers you use. If you sell a security at a loss in one account and replace it in a different account during the 61-day window, it's a wash sale. To go a step further, the IRS says this applies if the replacement is made by your spouse or a corporation you control. Most tax experts agree this means you adjust wash sales between all the accounts involved in the same tax return. Now, if you're thinking of replacing a position in your non-taxable IRA, the IRS rules cover that. I'll explain later why this can be very disastrous. What about short sales? If you close a short sale at a loss, the IRS specifically says opening a new short sale on the same security during the 61-day window triggers a wash sale. Most tax experts also say the rules imply that buying the same security could trigger a wash sale as well. Now that we understand identifying a wash sale, what happens when a wash sale occurs? The IRS rule prevents you from taking a loss if deemed a wash sale. Instead, the cost basis for the replacement position is adjusted to include the loss amount. Let me show you what that means. Going back to our example, when you replace 100 Tesla shares a few days after the loss, you have a wash sale. The actual cost basis of the replacement was $23,000, but now you adjust that, adding $1,000 from the wash sale, making the adjusted basis $24,000. In the TradeLog application, we can see this adjustment reported. Now, the loss isn't gone forever. You just can't claim it against your taxes until you close out the replacement Tesla position. Another detail to know is that these adjustments can accumulate if you keep buying and selling the same security. Continuing our example, say you next sell the replacement position of Tesla and have a loss of $1,500, and then you make another replacement a few days later. the loss is again disallowed and adjusted to the replacement cost basis. This can continue again and again if you keep trading the same security at a loss. Of course, most traders don't buy and sell the same number of shares in each trade. And so the IRS says the wash sale rule applies proportionally if the replacement is either more or less shares than the loss. So if you sold 100 shares at a loss, and within the 61-day window you bought 20 shares on one day and another 80 a different day, the loss amount is adjusted proportionally to the cost basis of these replacement positions, as you can see highlighted in this report from TradeLog. You should also know the rules require your holding period for a replacement position to include the holding period of the security sold. This prevents someone from converting a long-term loss to a short-term. Say you sold Tesla shares that you had held for 400 days. The sale resulted in a long-term loss. You then replace the position within the 61-day window. These new shares bought need to be adjusted to include the 400-day holding period. You'll see TradeLog adjusted the date acquired in this example. Now, remember I said replacing a position in your IRA can trigger a wash sale? When that happens, it's a really bad situation because the IRS says the loss is disallowed, but you don't get to adjust the cost basis of the replacement in your IRA. In other words, the loss is permanently disallowed, and this almost always hurts your bottom line. I've explained some essentials for understanding the IRS Wash Sale Rule, and as you've seen, it can get very complicated. Here's some key takeaways to remember. The wash sale window includes the 30 days before a loss and 30 days after. Wash sales can occur between stocks and options. Wash sales can occur across accounts, including a non-taxable IRA. And when a wash sale occurs, the rules disallow the loss, often deferring it to the future. Now, you might be worrying about how you can avoid wash sales. In our next video, I'll explain how wash sales affect active traders, and while they can potentially have disastrous tax results, I'll show you why you don't need to become obsessed with avoiding every wash sale. If you haven't yet subscribed to our YouTube channel, make sure you do, so you'll get notified when we release our next video. And go ahead and visit our website, tradelog.com. Under Education, you can learn a lot more about the wash sale rule and other trader tax topics. See you next time.